Hey, I'm Charting Man Dan, trader and technical analyst with the Chart Guys, and in this video we're going to look at where the broader market stands as we head into CPI numbers tomorrow and the financial sector earnings to end the week. Continued rotation into our growth names that have not been participating in the bull market the last 6 months. They're playing catch up now. We'll check in on where they stand. So we're on the futures charts for the S&P 500 and the Nasdaq. First off, the CPI numbers are tomorrow, I believe 8:30 a.m. Eastern, certainly pre-market. And that is going to determine whether the S&P 500 sees another higher high and a new 52-week high, or sets a daily lower high and opens the door for the possibility of confirming a daily downtrend. And we have not confirmed a daily downtrend in the S&P 500 in a very long time. Has not happened in over 4 months. So that would stand out if it happens, but again, the burden is on bears because we now have a new benchmark level. The low of yesterday is our daily higher low. And the same for the Nasdaq, low of yesterday, key support level. The Nasdaq's a little different because we've got our tightening range where we've got the equilibrium that's tightening up. And again, same thing, CPI is going to determine if we get the new 52-week high bull break of the double top or head back down and confirm a daily downtrend into potential weekly consolidation. So expectations are fairly high in the sense that a lot of people are thinking a low print for CPI is going to come in. I have no idea. We'll see. I'm positioned, as I mentioned yesterday, long Chinese names, some psychedelic and cannabis exposure, some growth in ARKK, and I am short at Apple and Microsoft. I took some of that position off today when the bears lacked follow through, but so far going well with all my longs green and the bears were pretty flat. So the semiconductors potentially continuing to tighten up as well. Bears trying to set a daily lower high compared to 154.07, and we would have to break the low of today tomorrow for that to then be set. But keep an eye on the semiconductors because when SMH breaks this range, we're going to see volatility and volume pick up a bit. And NVDA is also tightening up very nicely. Today was an inside bar. So can't get much tighter than what NVDA has done over the last week of trading. We know a break and some volatility is coming. Healthcare following through with the daily bounce, but we know the daily lower high is the most likely scenario, anything under 133.04. And we'll see if the bears are able to confirm the daily downtrend to follow through with our new weekly lower high in the equilibrium, or do bulls break this weekly equilibrium in their favor and continue to have the broader market bulls extremely confident. The financial sector daily bull flag has confirmed. Highest level now that we've seen in the last 3.5 months. Daily uptrend remains our guide. Earnings at the end of this week in an area with a lack of resistance. I'm looking at 34.49 as the next little level. And just keep marching up our benchmark levels for full bull control. Now it's 33.25. IWM bull break of its tightening daily range. We had a double top right around 189. That broke. And now, again, same thing. Highest level that we've seen in many months. And we're looking up at 190.70 as a little resistance level. And big picture, the monthly time frame has been tightening up for over a year. And the question is, do we break bull or do we set another lower high compared to 198 and remain within this tightening range? We're going to get that information in the next month or two. Growth names continue to be strong. Again, rotation. As I keep saying, as long as the broader market bulls remain strong, find the names that have not participated in the bull market and watch for them to be laggards. And we had this mindset with the growth sector months ago, and we were a little bit early, but it's shaping up very nicely on the long-term time frames. ARKK, weekly bull flag confirmed. And again, we were talking about how this is the potential of a cup and handle like scenario where you've got resistance, you fail to break it, and then you bull flag. And I did not have a position and talked about entering a position on weekly consolidation, which is what I did. And so now at this point, through the swing report, we had a target initially of 46.99. And so anybody that took this trade with the entry zone 43.60 to 42.60 should be out enough of a position to be risk-free, cannot lose on this trade. I personally will be walking up my stop every daily high or low that we set along the way, and I'll be in this position as long as we're in a daily uptrend. The next target at this point, we're looking up at resistance of 53.86 as the next major level. The inverse monthly head and shoulders pattern has confirmed. Who else confirmed it? Coinbase confirmed the monthly inverse head and shoulders pattern today. Who hasn't confirmed it? Baba. Still a lot of work to do. Been scouting this one for 4 months at this point. Baba saw some consolidation today. Bulls bought the dip, but I care most about 94.29. Must break that level to confirm the weekly uptrend and confirm the shift in momentum to try and confirm the monthly inverse head and shoulders, just like we're seeing ARKK do and Coin do. There are a lot of growth names that are squeezing some shorts right now. Coin is definitely a good example of that. As you see over the last 5 weeks, we've gone pretty much straight up, almost 100%, just about 100%. You've got Hood. Hood had a monthly equilibrium that just broke bull over 1152. Now bulls need to clear 1276. But again, look at the last couple of weeks. Bulls are just piling into these names and forcing shorts to cover. Shorts have been comfortable in these names. Shorts have been looking around saying, wow, the S&P 500 has been going up for 4 months, but these names aren't doing anything. I'm in the right names. These are nice and weak. Meanwhile, the bulls are just going around playing musical chairs, going from one sector to the next. And so now it's the growth sector's turn. And it's just a question of how long can the broader market stay strong for this growth-focused market to be able to go up. AI names. So AI bull break of 42.19 to the highest level that we've seen in a couple of weeks. Not very significant. Again, I am still watching for the possibility of a 2-day lower high. And we would have to see a 4-hour rising wedge break bear if that were going to shape up. And it's possible just because we had a bull break straight into consolidation. Now a bull break. If we're red tomorrow, I'll be watching for a 4-hour rising wedge. But I'm not fighting these bulls as long as they keep buying these dips so aggressively. PLTR, testing resistance of 17.16, trying to confirm the weekly bull flag. Again, you look at this chart. Is that an AI bubble? Nothing about this chart screams bubble at all whatsoever. AI itself on the weekly chart. Worst case for the bulls, we look for a tightening weekly range into August. Psychedelic name MNMD, which I've been talking about since the weekend video, is now following through, breaking 1, 2, 3 resistance levels and at 52-week highs. Nope, I take that back. We're at 9-month highs. Daily uptrend is our guide. Lots of space for a daily high or low. I did take some profit today. There was initial morning weakness. We had a big move up, and then once we hit the new low of the day, I never liked that complete 180 turnaround. So I did take a little profit off my swing position when that was happening, shaping up. So sold at 404. Definitely left some money on the table, but still going to hold out now the remaining of this position as long as we're in a daily uptrend. And again, the whole premise of this trade was, I've seen this chart before. XPEV just broke it bull. Completely unrelated, but same technical setup. Other than that, MSOS Cannabis trying to set a daily higher low and stay strong on the daily chart. CGC has been all bears, but it's trying to shape up a short squeeze. It was up 20% plus at one point today. Bulls must clear 6329 to confirm the first daily uptrend in 47 years. So again, anything that has a lot of shorts, we're at the, we saw this in 2021. It was just headhunting of names that have high short positions. And we're seeing that again. And CVNA, this name dropped 99% over 16 months and then bounced 1,100% in a couple of months, 9 weeks or something like that. And again, it's just, they're going after the shorts. This name's up almost 500% in a month. I guess 2 months. So the party will come to an end eventually, but again, the broader market will tell us when that's happening. We'll see all major sectors dropping at the same time. We'll see money leaving the market instead of just rotating around. In the absence of that, bulls are just bouncing around. So Chinese names, I mentioned BABA, XPEV daily bull flag trying to shape up, tested resistance today. I never got my hourly oversold, didn't get weak enough, but we are testing the high to try and confirm the daily bull flag like NIO has already done. NIO saw a little bit of follow through today. So again, keeping an eye on the Chinese sector, which is still, I'd call it, well, cannabis is still real beat up, but Chinese names in cannabis the last 6 months are participating the least now that a lot of these growth names are playing some catch up. The dollar broke our weekly equilibrium. This is bullish commodities, bullish stocks, bullish crypto. Now bears want to follow through and break 178 to get to the lowest level in over a year. Bears will need to confirm a daily downtrend as a result of the next bounce, but this dollar weakness is definitely a factor in this strength we're seeing in the market, specifically with these higher risk, higher reward growth names. Gold did confirm the daily uptrend. No follow through at this point, but technically it's the first daily uptrend in over a month. Silver, a bit stronger than gold, but no follow through. Got to be cautious of a rising wedge. If we see a red day tomorrow, it's going to be a bull break into consolidation, bull break into consolidation. Not ideal. GDX, the miners, has to break 3077 to confirm a daily uptrend. Otherwise, we have a daily equilibrium. So again, the metals and the miners are not as strong as they would like to be with this dollar weakness. Let's see if they can play catch up. Oil bulls, stair-step pattern continues now for 8 days in a row. 75.70 is being tested. If that level breaks, we confirm the longer-term trend change, and the monthly bounce will then more convincingly be underway. So oil bulls still keeping control. Natural gas, bulls following through. We had the 4-hour solid bounce. Trend change confirmed. Weekly bull flag is on the table for natural gas. Very healthy consolidation at this point. We have a couple daily resistances to be watching. Bulls eventually will have to regain a daily uptrend with the higher low and higher high. But for now, 4-hour uptrend is our short-term bull control guide. And the energy sector benefiting from oil and natural gas strength the last couple of days. Energy sector just hit the highest level in a couple of months. So who else hasn't run? Solar sector, still trying to shape up a falling wedge. Solar sector is not participating. Definitely watching for that to potentially change at some point. And still just watching the Chinese names and the psychedelics and the cannabis names. So CPI tomorrow. Again, the tech names are not following through for the bears. They're definitely weaker. There's relative weakness there. Apple broke the low of yesterday, but no follow through. Microsoft broke the low of yesterday with no follow through. So I see that and I take a little profit. And again, that just ensures that I am hopefully positioned comfortably. So going to keep an eye on weekly EMA 12 as a potential target. If we continue to see consolidation, Apple much further away than Microsoft from that level. But CPI is going to have a major impact in the short term. So again, I'm just sticking with trends. This entire year, I've been sticking with trends, recognizing trend changes, ignoring narratives. I don't care at all about the word recession. It has zero impact whatsoever on anything I do with trading. I don't care about yields at all in my trading. I don't care about rates. I care about price action and trends. And it's keeping me on the right side. It's keeping me looking in the right direction. And I'd say that so far, I don't want to jinx it, but in the first half of this year, I've had really good technical analysis and calls on individual sectors and individual names. But as far as the broader market is concerned, I don't think I've ever been anywhere near this in terms of just on top of things. And so hopefully this continues for the rest of the year. But again, it's just price action trends. It seems, like some complicated thing. It's just not. It's the weekly and daily trends that are guiding my sentiment and my decision making. I bought ARKK because its hourly RSI was crushed and a daily higher low was the most likely scenario. Could I say with confidence that we were going to follow through and break monthly resistance? I was not highly confident that that was about to shape up, but I put myself in a position to benefit if it did and to not lose much at all if it didn't. Backburners are still happening. Hood, 5-minute oversold conditions on the morning. marked an hourly higher low, and then 5-minute oversold conditions in the afternoon marked an hourly higher low for a 3% bounce. It'll keep working until it doesn't, and when it doesn't, we will see it with high bear volume and all major sectors dropping together. Until then, rotation is the name of the game. Hope you're well, do good things. See you tomorrow. Unripe blackberries, ripe blackberries. Lavender, bunch of jewel weed. Don't know. This is wild carrot, supposedly a weed, but I like the flowers, so I let it go. And you can see there's ants all up on this one flower. Here we've got a beetle that is in a prime spot.